Hello, everyone, and welcome to another episode of Spotlight on the Board of Directors. Today, we have with us Jamie Coutts, all the way from Australia, speaking to us about his experiences, about his career. So let's get right into it. Hi, Jamie. How are you today?
Very well, thank you, Rashmi. How are you?
I'm doing great. Congratulations on being a part of the board of directors. That's a big achievement right there. How does it feel?
Well, I think it's been 7 years, but it's been a great experience.
Yeah.
Probably one of the best experiences in my professional career. And I'm, eternally grateful for the people that put me forward and proposed my nomination, and for those that approved it. And I hope that I've contributed to the board, to try and get the Asia Pacific region really humming along, which I think it has, and that's really more of a credit to the executive and also the staff, people like Joel that have really done fantastic work in establishing a footprint here in Asia.
Yes, absolutely. Um, Jamie, this is one question I like to ask everyone. How did technical analysis happen to you? Did you choose technical analysis or did technical analysis choose you?
Um, Probably a little bit of both, but it was fortuitous because it was a bear market at the time. I think that's how most people come to technical analysis, or at least start to get serious about technical analysis. And it
Yeah.
wasn't the last bear market. You have to go all the way back to the 2003 bear market, which
Okay.
a lot of people don't even remember. They weren't even in the market, but that was a tough time, and it was after quite a large speculative blowout or euphoric or major topping in the market, for
Mhm.
at least for tech stocks, that it would take 15, 16 years to reclaim. And we had the same sort of situation where I was, which at the time was in Australia. I was working for a large investment bank, doing equity and stockbroking, and we had the number one team ranked in all the technology, internet, the TMT sector back in the day it was called, which
Right.
was telecommunications, media, and technology.
And
And
technology.
we had, sorry.
Yeah, go ahead, please.
Yeah, and look, I was very much following analyst calls, which were based on, the typical fundamental rationales, and it didn't serve me very well during that bear market. So I was just fortunate that we employed someone who came in who was a pure technician, and sitting next to him for the next sort of 1.5 years taught me a lot, and that sort of prompted me to go do the academic sort of do the proper qualifications around it, so I could integrate it into my process.
Right. So, since your journey from moving towards technical analysis because of the experience that led you there, have you noticed a more greater acceptance for technical analysis over the past few years or since the time that you started out?
Definitely, I think it's growing. There's a couple of reasons for that. The validation of technical analysis through what has been explained in behavioral finance academia, through all the factor analysis, the factor research, especially around momentum. These are things that have just validated what technicians have known inherently. Really for almost a century, if you go back to the original writings. So I think for a lot of people in the market who have technical analysis as part of their process, it's been much easier to have conversations now when academia, through different terms, sometimes these are very technical terms used from by academia to explain a lot of the things that we talk about in technical analysis. But once that sort of started to proliferate in the 90s, 2000s, especially in the last 5 to 10 years, there is really no place now that can't accept some of the major tenets of technical analysis. And I think just the way the CMT program has evolved to also have a very strong, pillar around statistical, or the backtesting, or statistical analysis of strategies has also improved things as well. So, it's a totally different situation to 20 years ago when I first started in the business.
Right. Yes. I think what this is one question that I had for you as well. Since you have the perspective of moving from a buy side equity specialist to a crypto market analyst at Bloomberg Intelligence, is there anything that has changed with regards to just how you analyze the chart, be it equities or crypto? Is there anything that you had to make a change into in your system just with perspective of analyzing the chart or looking at the price?
To be honest, not really. The correlation with equities and other risk assets increased since the pandemic. But the basic principles of technical analysis do not change, respective to price action on whatever instrumental asset class that you're looking at. What generally is different is the intermarket relationships and, to some degree, the macro picture as well. But the macro picture that supports a bullish or bearish environment for crypto is exactly the same as it is for equities and for other risk assets. And what I've found actually is that there tends to be more signal in what's happening with crypto, in particular if we just use Bitcoin as a proxy, for other risk assets. So now equity traders are actually able to use crypto as part of their process to actually get better signals on their asset class. So that's kind of what's changed. And the other thing that is, which I'm really excited about, and hopefully we'll see more of this in a formal fashion. I'm certainly writing about it, but technical analysis on-chain data, on the fundamental data that is derived from the blockchains for all these different networks, Bitcoin, Ethereum, Avalanche, whatever the network is, can also be applied. So it's secondary or derivatives, but it's just as useful. So that's a really interesting area. So having seen that, and I think it's very early days in that sort of new class of technical analysis.
Right. That really does sound interesting, and it just as to how it could play out in terms of usage and strategies. So when you are performing your day-to-day analysis when you're looking at cryptocurrencies and you're looking at the market, is there any particular technical analysis indicator that your chart will always have? Is there anything that you cannot do without in terms of an indicator?
I think we could do without. If it push comes to shove, all you need is price. I could do without most of them or all of them, as long as there is price. But if you had to, put a gun to my head, I think the thing that I simply use is moving averages or a combination of them, because the volatility in the asset or in these these cryptocurrencies or digital assets is quite high. So the use of simple moving averages is just a simple technique that I use that works extremely well and is validated and back tested. So they're the sort of things that I look at. But I love some of the new indicators that are coming out. In fact, a lot of the time I've replaced indicators per se, separate indicators. I'm using tools which actually combine indicators that are color coded. So nothing on the screen other than price action, but the price action, the bars, the candles, or the line, depending on what you're looking at or the way you want to look at a chart, is actually representative of 3 or 4 indicators in the background, momentum indicators or mean reversion indicators. And I think that, again, it's all about really just looking at price and sort of seeing it in a very simple fashion.
Right, just keeping it simple, essentially. Got it. Okay. With all the chatter that you hear around crypto, you see that there's a lot more. The new generation is a lot more involved with, be it cryptos or NFTs or anything that comes up new in the financial market. Do you think that the emergence of this new asset class has, in a way, also maybe helped the new generation be a little more aware of the market or a little more aware of how the principles, macro or microeconomic principles work out? Because they're more interested in, okay, if Powell says something there, then how is it going to have an impact on crypto? So there's that new kind of an interest that's developing in the young minds. Do you think that crypto has probably done that in a way?
Yeah, well, that's a great question. Most certainly. And, everyone comes into crypto for different reasons. You mentioned NFTs, so these are usually your content creators, and NFTs is such and NFTs and Web3 are vehicles for people to actually somewhat disintermediate the traditional models and the gateways so that they can actually derive value for the work that they produce, whether it's art or written content or videos or music or whatever. So that's kind of like, that's opened up a whole new class of people. And I think once they're inside the scope, then actually, they have to be aware of the crypto assets that they may want to denominate or the chains they want to use. So there is this, I think, growing understanding from a whole new set of users that perhaps would never have been interested in finance. And because Web3 blockchains, peer-to-peer transactions, these networks are providing a gateway, that is definitely having some impact. But the other impact that I've really noticed, before even NFTs came along, was really looking at the younger generation coming into the space with and getting through Bitcoin, usually as that first step into the ecosystem, starting to get very attuned to what is happening at a monetary level through central bank policies, or even on the government side as well with fiscal policy. So I think the difference between today and say 20 or 30 years ago is that finance people pretty much knew what was happening with monetary policy, but the newer generation is kind of getting like a accelerated learning in monetary policy very, very young, and are coming into it through Bitcoin being as the vehicle. And then they're just sort of like seeing the world, the ecosystem that lays out in front of them. If they're on an exchange and they can trade all these other instruments or these other assets. So I just think that the newer generation has far more awareness of the manipulation that's happening through central bank policy, which I think ultimately is great. You've got the social community, the content creators coming in through NFTs. And the other thing that's really great for the CMT Association or technical analysis in general is that, most people trade these assets purely based on price. So we've had since, 2012 or 13, when sort of Bitcoin became the phenomenon that it is today, and exchanges started to actually appear so people could trade Bitcoin, and then the other crypto assets that came after it, but they had to learn technical analysis. So they didn't come in through traditional fundamental analysis, they came in through technical analysis. And some of it's been, badly taught, or it's been, people have not applied it in the best way because they've been taught by YouTube gurus and all this sort of stuff. But I think what it does mean is that the CMT has got an amazing growth trajectory, because these people are really looking for a disciplined approach to trading crypto assets. And, that's what obviously a CMT designation can do.
Right. It's quite amazing to see that kind of a change come through in just the young minds coming into the market right now. Well, for all those young minds who are probably approaching the CMT Association or getting involved with their examinations and taking part in technical analysis, what would be your message to those who have just joined the technical analysis world, and the ones who have completed their 3 levels of examinations as well? What would be your advice to them? And what would be the one app or the one website that you could recommend to them for just tracking their crypto investments?
I think it's, if you're at the start of your journey, I think one of the really cool things is if you're already if you're part of the CMT, then you've got this library, this unbelievable library, which is a resource which, has so much potential for learning. Is to start there and go through, choose whatever your flavor is or what the thing is that interests you the most, but access those videos, those previous presentations, whether it's, webinars or whether it's presentations from our symposiums and events around the world, and really learn from the greats, because they're all part of the CMT Association. So that the community that we have is is an untapped resource for a lot of people. And the other thing is, if you've got questions and it's a contemporary person who's given the content or the presentation, reach out to them. The thing about this community is that they're incredibly open and engaging. So that would be my advice to all. I think in terms of a place to go look at, to keep track of things, there's lots of free websites. If you're a Bloomberg client, you've got access to Bloomberg data. If you're not, then, I don't want to mention any in particular, but if you just Google search, you'll come up with plenty of different options. And there's lots of free places where you can do your technical analysis as well.
Great. Okay, Jamie, one last question for you. You're now a part of the board of directors at the CMT Association. What are your aspirations for the association going forward?
Well, I think the growth that we're going to see coming out of Asia is going to continue. That's been a real theme for the last couple of years, and ultimately, I'd love to see that sort of grow and expand into some of the markets that we've not tapped into as much. China represents a great opportunity for us, and I think that's sort of the where we'll see a huge amount of growth going forward. But aspirationally, look, I've been based in Asia for. I was based in Singapore for 14 years and just moved back to Australia now. I don't know, that's kind of counted as being in Asia, but not perhaps in the eyes of some of the countries in Asia. But being in Singapore, my aspiration is that the whole, the cosmology of all of the Asian countries continues to come into technical analysis, and that the voices from the region, so many smart analysts, smart traders, smart investors, portfolio managers, that they rise in prominence and they also become, globally recognized, as we've seen a lot of the, the greats from the United States and from Europe. So I think that's going to happen. It's just, it's already starting to happen. And I can see that in the next couple of years with the growth that we're seeing, that, some of the up and comers will become really globally recognized.
Absolutely. Yes. That was great, Jamie. Thank you so much for taking out the time to speak to us and giving us your perspective about where you see the CMT Association headed and how you're looking at the markets in general. Thank you. This was a great conversation. I've learned a lot. Thank you so much.
Thanks, Rashmi.